Good morning, good afternoon, and good evening to all you members of the TSB Nation and a hearty, happy 2024, Season 4, Episode 1. I'm Rustin Edwards, based in Geneva with my illustrious co-host in Dubai, which is probably a lot warmer than here, Matt Stanley.
Happy New Year to one and all.
Happy New Year
Season
to
four.
you. From,
I
from
know.
balmy -2 degrees here in Geneva.
25 here today. Very nice. It's very pleasant. But yeah, I hope you're happy. Your New Year's resolutions have already been broken.
What's a
Put them.
resolution? That's what I do with my screen to get it sharper, make it more resolute.
Oh, well, that's it. That's about it. That's all I've got as well. No, I don't have any because what's the point? Just drink more water, less wine. But some fun in that, is there?
At least for today. But to tell you who probably has a poor resolution or any oil bulls out there, crude down $2.13.
Yeah.
A downward slide all day today. 76.63 is where we got Brent here at this moment.
And I just got the feeling 76.63 could look pretty good in a week or so. I feel like that the market just doesn't like itself right now. I mean, gas oil cracks down, gasoline cracks down, Brent, yeah, like you said, 76.63 down $2.10 on the day. Look, I started, commentary 2024 daily oil commentary last week, and I just get the impression that the market is looking more and more at the economic headwinds that the world faces rather than just within the prism of demand and supply for the oil markets. And I just think that it's going to take a lot to shrug that off. I'm not sure, and I'll get shot down probably, like I always do. I was trying to start the year off on a positive foot. I just don't think OPEC have got the bullets. I just don't. I don't think that there is enough they can do to replicate what happened last year, which was as soon as there was a drop, of more
Well,
than say 5%, they pulled out the supply cut card. I just don't think they have that this year.
well, it's a law of diminishing returns in regards to when I think about OPEC and what they can do because they've cut so much. So it's easy when you're producing, say, 30 million a day, you cut 2 million, that shocks the market because, oh, you've cut 2 million of production. Oh my God, that's going to tighten things up. But when you're not even hitting what number you say you're supposed to produce and you cut even more volume, it becomes down to, well, how much are you actually going to be able to physically cut and still maintain your market presence and your market actions? Now, I think today when you had the OSPs come out from Saudi Arabia,
Yeah.
it kind of surprised the market of how much they cut the OSPs. So you're cutting supply to the market, and you're also cutting your overall selling price to try to stimulate demand.
Well, I think that's been reflected in what's happening in pricing today. I just think the health of global demand at the start of this year is front and center. And what the Saudis have done, they've done an extraordinary job. They've done very well in doing it. Is that over the last 2 years and a bit, because it's the what Russ is talking about the OSPs is the official selling prices of Saudi crudes, depending on what grade and depending on the destination of each cargo. So there's a different OSP official selling price, which is a differential above or below the benchmark that the Saudis price their crude. So say Brent +2, or now it's -2 versus whatever the benchmark is. That's the lowest in 27 months because the tools that Saudi have used have been cutting supply. Now, is this a signal not to the end, because I'm not going to use something as cliched as that or as dramatic, but something that the Saudis are genuinely concerned about and have had to be aggressive in narrative and the OSP cuts themselves in order to ensure that the Saudis can place their cargoes, because we see right now that there's going to be a build until about March, maybe April, of about 400,000 barrels a day in crude stocks globally, which is significant. And I think that the market is translating what's happened over the weekend by the Saudis in that, if you tell us there's nothing you can do apart from to cut prices, I don't want to buy any more crude oil things. I'm going to sell it. And I think when the US get in 52 minutes, we could see a significant drop in flat price.
Oh, I would fully agree with that because I mean, not only do you look at you look at the OSP numbers what have come out already, and also you look at what happened with last week's EIA stats. The build in products and the drop off in product demand over the holiday weekend is pretty substantial. I mean, we
Yeah.
ended the year basically over the 5-year average of 2015 and 2019 for gasoline with
Yeah.
the last stock build. So actually 1% increase in overall stock from the 2019 average. Uh, all other products were still below that average. Don't get me wrong. Distillate is still 10% below, but gasoline was the big consumer grade in the United States that everybody was been focusing on about how low gasoline stocks were. And now you're above the 5-year average from 2014, 2019.
Excuse
When you
me.
look
Yeah,
at
you.
days, when you look at day coverage for demand, you've almost got 27 days of demand coverage now for gasoline,
Yeah.
which is above the 5-year average of 25. So consumer grade products in the United States don't look too hot. And that probably translates to the same here in Europe. I mean, we've had a fairly mild winter so far. You know, granted, we have an Arctic blast hitting Europe today, and it's going to be impacting Europe for the next week. That's probably going to change the whole supply stocks when it comes to natural gas and heating oil. And that's why heating oil at least is supported in Europe right now. Natural gas is coming off the lows, but natural gas has been actually selling down for the last 2 months on the fact that it's been a bit on the warmer side. Thank you, Greta. Um, so, nevertheless, you know, we are seeing a case that demand is still not there to hold product stock to create refinery demand, refinery margin, although refinery margins mathematically look great.
Yeah, I agree. And look, we talk about a tale of two halves. You know, the sort of the way that I would translate market sentiment in oil, right, or the energy markets at the end of last year, even the end of last year, was still somewhat optimistic. People were still like, "Don't worry, I think things are all right. Demand is going to come back." I generally think people have started the year going, "Yeah, nah, I'm not convinced." You know what you're reading compared. If we compare this time last year to now, people are not saying, "Yeah, but the world's going to be a bit shitty." But don't worry, China will save the day. I'm not reading anything like that. I'm not reading that there's any sort of caveat to anything apart from, yeah, demand doesn't look that great. It doesn't look terrible, but it doesn't look, it'd be very difficult to form an argument to say, yeah, I'm bullish oil. I'm buying this. I'm buying $77 crude. I don't think that you will see anything apart from money flow out of oil over the next, I don't want to call it, but I would say at least the next 2 or 3 weeks until the end of Jan, when we start seeing some data coming in. We've got Chinese New Year, so it'll be fairly light in terms of liquidity. Then you've got IE week, refuse to call it that, it's IP week. So I think that the oil market faces a real challenging year ahead. And I think that the OSPs being cut by the most across the board of $2 a barrel just made the market go, yeah, okay, that's the first real tangible sign that it's not just me that's worried.
Well, and you also had today, you had the shadow bank Zhongji file for bankruptcy in China, which was unexpected. I mean, yes, that was a entity that was being used to help finance and build out different property sectors and trading, what have you. It's not an official bank, but it was loaning out like it was a bank. And there was expectations that the Chinese government would support it and not let it go belly up, but it's gone bankrupt. And
So
so
are they the fall guys instead of the Evergrande going?
well, Evergrande is still having problems because Evergrande EV also got hit today because they had a couple of their executives detained by authorities.
Yeesh.
So Evergrande's still out there; it's still percolating along. But the Zhongji Enterprise Group, when it filed for bankruptcy on Friday, the
Yeah.
headlines came out today and says it just can't pay any debt with all the real estate problems.
Yeah.
So it just kind of lays out the underlying tone that China is not going to be there to bail out the market as it has in the last 10 years. Uh,
Yeah.
I mean, the only saving grace I think the market has when it comes to demand is okay, you've got the United States doing a ratable buy program for the SPR,
Yeah.
buying 3 million barrels a month, it looks like is how they're going to go with it. And it's month after month after month, tender after tender. And part of that is due to the fact that there is a operational logistics constraint about refilling the salt dome caverns in the Gulf of Mexico. They can't just fill them up with 1 million barrels right away. They have to be filled in lightly and very slowly so that they maintain the integrity of the salt domes. So
Of course they do. Of course
3
they do.
million, 3
I
million
mean,
barrels a month is what they can do.
who didn't know that? I mean, you're stupid if you don't know anything about salt dome caverns. No, you're right. I mean, look, yeah, it's been one of those. Like I said, it's only. I feel like we're about 3 months into the year instead of a week because, I mean, you certainly don't want to be in the tech industry. I read on up to Thursday, $380 billion have been wiped off the value of the tech industry because of this. The rout on the S&P and the Nasdaq and Apple shares and Barclays came out and obviously had a bad Christmas and New Year and said, nah, don't buy Apple. They're rubbish. And then you had, the unfortunate incident, the Air Alaska flight where it landed in Bob's garden and he found a, a door of an aeroplane. I mean, I don't know what Bob's been doing for the last couple of days. Did you read this? A teacher called Bob in Nebraska or something found a door in his garden of a plane. Now, he'd been there 2 days. I don't know what Bob's been doing, but I'd pretty much reckon I would see if look, Mabel, there's a door in our garden. Oh, leave it for Monday. Leave it until Monday. Leave it in there. But no, that was bad if you're in the aviation industry.
Well, and
Bad for Boeing.
Boeing's down 8% on the back of all
Wow.
this.
Yeah, I mean, look, the only if I let's balance it because we like a yin and a yang. The only part of the barrel I would say that started off relatively strongly is probably fuel oil. Fuel oil's had a relatively strong start to the year comparatively.
Well, I mean, are we talking what the residual side of the barrel in general or a high
In
sulfur
general,
versus
yeah.
the LSFO?
Fuel oil. If we're looking at fuel oil refining margins compared to gasoline,
Well, high sulfur fuel cracks have actually been very supportive. And there is a bit of, why is that so? One of the things is that Russian oil flows don't seem to be impacted at all by anything that's going on in the Red Sea. Uh,
yeah,
so all that barrel keeps moving down south through, so all that fuel oil continues to move.
yeah,
The Chinese import quotas did allow for some additional fuel oil imports, I believe. So that's put an extra demand pull. You've got the heavy sour crudes, though, is where kind of I think the strength is coming from because the Pemex is on the verge of starting up the Olmeca refinery, which is 320,000 barrels a day of mine.
finally.
It's no longer going to be going into the market, but it's going to be processed locally. You've got the TMX pipeline, which is going to be opening up to export heavy Canadian sour crude through Vancouver versus the Gulf of Mexico, which is going to reduce the transit times into China for that.
Yeah.
Uh, I know that they ran into a few regulatory issues, but I believe they're supposed to start doing line fill on that pipeline at some point in the next 4 to 5 weeks, uh,
Okay.
which will then pull incremental heavy sour crude off the market. So it does paint a very constructive picture for heavy sour material, thus high sulfur fuel. Uh,
Wow.
and if you think about all the ships that are rerouting around Africa, my guess, the majority of those ships are probably scrubber fitted vessels because they are already on the long hauls from China to Europe. And that just increases bunker demand for high sulfur fuel as those ships are going to be burning an incremental, 7,000, not 7,000 tons, excuse my math. The voyage goes from 7,000 to 14,000 miles. So they're going to be burning incremental fuel to travel that extra 7,000 miles to reach the same port of call.
Wow. Just on the Russian story, you mentioned that December Russian uh, December exports of Russian oil were the sixth highest we've got on record, and they were 40 million barrels higher month on month, 242 million barrels of crude of oils, all oils out of Russia. That's the sixth highest on record.
So,
Our
so,
data
so
goes back
what,
9 years.
what exactly did Russia cut then, according to their compliance with their agreement with Saudi Arabia?
Arsenal. I know. Sixth highest on record. But I mean, look, it does need to be put into context because we spoke about this last year, and I don't want to lose it because, the news value of what is happening in Russia, what's happening in Gaza, what's happening in Sudan, they still hold news values as far as I'm concerned. But they don't if you're selling newspapers because it's the same stuff. What is happening in Russia and Ukraine is arguably, well, I think at some one point last month, Kiev had its most active day of bombings from Russia. But at no point has it really affected what's happened with Russian oil exports. The
No.
sanctions are simply not choking off income into the country because they are managing to export record volumes. So, look, it's
Well, remember, they're not sanctions. So it's a price cap. And the only thing the price cap does, it prohibits you from using Western services for the transportation and trading of that oil.
yeah, but you can't bring it into the EU, into the
Yeah, but
US.
that's an embargo that the EU has and the US has against Russia. But there's more to the world market than Russia or than the
I
US and
agree.
the EU.
I
And so
agree.
the other markets that are accepting that oil accept it without any problem. Therefore, the oil can move because they're using other services other than Western services if the barrel's trading above the price cap. If it's below the price cap, use Western services and enjoy it and keep
Yeah, I
moving
mean,
them.
3 month average, India imports of Russian energy, 58 million barrels a month. If you take it back to 2020, it was 2 million barrels a month. So look, it's clear, but I mean, look, I don't want to dwell on that because and this is the issue because we're approaching in the middle of March, 2 years since the invasion. I can scarcely believe that, and nothing has changed.
No.
The aggressive narrative is still firmly in place. Of course, eyes are more on what's happening in Israel and Gaza and the Red Sea, which I know we're going to get onto in a moment because that really is in a lot of people's minds. But trade flows haven't changed. Oil is still moving, and look, let's move on to the Red Sea on that because oil's still moving. Does face an issue though when one of the world's biggest choke points in the Suez Canal is under extreme pressure. I mean, you're on a ship inside, mate. You tell us from in the horse's mouth, how is it? Is it an anxious time in the shipping community, or is it one people are saying we can charge a little bit more?
Well, I think it's a combination of it's a combination of a couple of things. If you are a Western company with whatever ties you have, you think about the safety of your crew primarily over, and then the safety of your asset. And so for the crew's sake and for the asset's sake, you don't want to go into a high probability zone where you could be impacted either directly or indirectly from some type of activity from a terrorist organization. Because frankly, what are the Houthis doing? They're performing a terrorist operation against worldwide shipping.
Yeah,
They can say whatever they want to say, but for the end of the day, they're attacking whatever ships they want to attack. It seems that certain ships get to go through without an issue, but if you're a Western ship, you're probably more in the crosshairs than a ship that's running Russian oil. Um, that's my
okay.
that's my guess. So you avoid the area. You don't go to the Red Sea, and you can see that through the decline in the amount of traffic of the Suez Canal. That's come off. You can see it also through decline on bunker fuel sales out of Egypt. They've dropped off dramatically because nobody's going through the
Yeah.
canal, therefore nobody needs fuel.
Well,
Um,
For Egypt, just on that for a moment, for Egypt, it's an economic disaster
oh,
because
it is. It's
the, the
huge.
the reliance on the Suez transit fees, and I forget what they are. I know it changes, it depends on the size of the boat, etc. But let's say, I don't know, what is it? $500,000 a ship?
Well, it's under around that, depending on the size of the vessel, yes. But they've
Right.
also started offering discounts to incentivize people to go through the canal and
Really?
risk the Red Sea transit because
Wow.
they're losing money. A 20% drop in transits is a huge hit to their economy.
Yeah.
It's almost as
Yeah.
bad as when the Evergreen what was the name? The Evergrander? Evergrande?
Yeah. And the Ever
Anna
Given,
Brown?
Ever, yeah, no, yeah, and Ever Given, yeah.
Evergiver, yeah. When she ran aground and she blocked the canal for a couple of weeks. And the
Yeah.
revenue that the Suez Canal lost in that was massive. Now you have the
Well,
same thing
it,
happening today.
It did start up at one of my favorite ever website names was istheshipstillstuck.com. And everyone was on it. Well, I think the local guys on the radio here tried to get the founder of that website on. But yeah, no. Look, joking aside, it's amazing, isn't it? Because we've been inundated with calls about what's happening. You know, we've seen transits drop both from both directions, north and south. The container lines are the ones who've Maersk came in and said we're going to start again, and then hours later, one of their ship was attacked. Now that'll probably be it will take a hell of a lot more for them to be comfortable to then retransit through Bab el-Mandab and the Red Sea in general. But it's the wider issue, isn't it? Because if you're just talking about the Red Sea, what does it mean? I mean, okay, it's cuts voyage time, say from the Med into and going east by what did you say?
15 days.
10 days.
10
How
to
many
15,
days?
15 days.
10 to 15 days. So there's an environmental impact. There's a delay on goods, any of those cargoes, whether it's Mars bars or gasoline, whatever it might be carrying, there will be a delay. But in terms of just standard containers, it means that those ships can't get to their intended destination, say Yambu, or say parts of East Africa, or say southern Egypt, Jordan. They're going to struggle because they're going to pay more because ships won't be in position. And you're going to have containers, boxes that are taken out of position that won't be in certain places they were supposed to be, which will mean manufacturers of certain goods won't be allowed to export what they were hoping to export. So it's a much bigger issue, isn't it?
Oh, it's a huge knock-on effect, and I think from an inflationary standpoint, it's going to probably point to if not a reversal of inflation in Europe and in the Middle East, especially in the Eastern Mediterranean Middle East. We're not talking the Persian Gulf, Arabian Gulf Middle East, but the Jordan, the Syria, Turkey, and ISM that take material in via the Red Sea route. It is going to increase the cost of goods. I mean, you already see container ship rates for boxes going up 300% to cover the longer haul. And if you throw on top of that the carbon fee, if it's a European bound container, you've increased your emissions, and the emissions, granted there is the discount that you have at 50% and it's 40% on the EU ETS for this year. You're still burning more fuel going around. Therefore, you have a higher carbon cost when you actually hit the EU port. And so all that's going to knock into a higher inflationary push on the material coming into Europe and also into the Mediterranean from all of this.
Okay, so look, there's wherever there isn't a trade, there's always a trade. So would you be a buyer of air freight into the regions that, let's say, for example,
No.
I am a pizza maker who likes Italian flour in the Middle East. Now that's going to be delayed. But what if I said I'm going to buy enough of it and I'm going to, get my mates together and all the other PTOLOs in the Middle East, there are loads of them. Let's buy a load of Italian wheat, Italian flour, and ship it via air cargo. So there are ways around it, but you're right. It all adds costs to the end user, which is not good for your
shipping is
faces.
the cheapest way of moving goods. And even with this rerouting, it's still going to be cheaper than air freighting something from Europe into the Middle East. Because when you think about the cost of moving a pound of flour on a plane versus a pound of flour on a ship, it's multiples from plane to ship. I mean, you were just talking about earlier about booking your own airfare flight, and you're spending more money now to fly from point A to point B. If you went on a cruise ship, it'd be a lot cheaper, but it'd take you longer to get there.
Don't say we don't think about you people. Even you pizza makers who are watching this, we've got you as well. We've got everyone. We've got the whole supply chain here.
Hey, pizza use energy just as much as anybody else.
Of course I do. I'm a PTOLO myself. Okay, so those who aren't transiting through the Suez decide it's too dangerous. Fair enough. Go around the Cape of Good Hope. But there are those who are transiting through the Suez and getting stronger and stronger, for want of a better adjective, insurance policies that cover war risk premium, which again is passed down to the end user. But what it's done to the cost of freight is, well, you can charge what you want, mate. You know, I've got a cargo from Yambu that needs to go into Durban. Well, you can charge what you want because I want to get there in 8 days, not 24 days, because
Yeah.
I've got a leg can to me. So, you know, there can't be a situation where one country runs out of fuel because of these issues. So there's a lot more leverage for what these Houthis are doing than the market actually understands, don't you think?
Well, I think though it's there's probably some diminishing returns involved in all that. Because just like with the Russian oil, initially there was this, oh my God, the world's gonna, Europe's gonna run out of diesel. Oh my God. And Europe never ran out of diesel. Prices moved up slightly or moved up. Then they came off again once all the freight rerouted and the new trade ways were established. So say the Houthis continue going full bore and just fire missiles at whatever ships come by or launch their drones or do their attacks on shipping as they go through the Straits of Bab el-Mandeb. People reroute, reestablish the trade routes under different circumstances, and all of a sudden everything flattens back out again. And I think, in the case you say, okay, is somebody going to run out of oil? Well, probably.
Yeah.
This has been going on now since the middle of December. It's not something
Yeah.
that started. So we've already had a month to adjust, and people who have adjusted have already adjusted.
Okay. But if we circle that back round to the conversations we were starting about the Saudis, with these Red Sea tensions, do you think they're artificially elevating the price of crude? And if so, by how much? I mean, it's a very difficult one to
Well,
quantify. I know.
Well, actually, from a crude oil standpoint, it does very little to actually impact the flow of crude oil when you really think about it. Because who uses the Suez Canal? An empty VLCC, potentially a loaded Suezmax, and potentially a loaded Aframax.
Okay.
So your major impacts from all this are probably more towards your clean products, your exports out of the Middle East and out of India into Europe. That's probably your biggest impact when it comes to oil. Because
Okay.
most of your loaded crude cargoes, if you loaded a VLCC in the US Gulf Coast, you're going around Africa anyway to go to China. You're not going through the Suez Canal because you can't go through the canal. And if you're a Suezmax and you loaded crude oil up into the North Sea, again, you're probably going around Africa anyway because you don't want to pay the incremental tow or towage to go through the canal because it doesn't pay you.
See, yeah, I mean,
And
it's a good point.
so
KPC have got a cargo jet right now, 95 KT that's going to go into Europe, and that's offshore Aden right now, right? That's where she is. So there is, yeah, you're right. I mean, we think that Europe relies over 35% of its jet fuel from the Middle East oil refiners, right?
Yep.
If the straits were shut, or Bab el-Mandeb was shut, then it would cause a 2-week delay because they've got to go around the Cape of Good Hope. Jet prices would
Go higher.
soar, but it would be a short-term thing.
Yeah. They would soar and eventually come back down to earth. Pardon the pun. And also you got to think, what cargoes could come out of the United States that could go to Europe to fill that gap.
Okay, fine. But if you're an algo trader sitting behind a screen, they're not caring about a vessel that's offshore Aden right now and what it actually means for physical fundamental flows. They're pricing in what war risk means, what potential supply disruption means. Now, you and I know, and I'm sure everyone else who's listening has a grasp and understanding to say, you're probably right, it doesn't. But the market is a lot thicker than that, not thicker as in like as in the layers are thicker about who's investing in oil. I would argue that there is probably an $8 premium in war risk right now. If there was no disruption or tensions in the Middle East, I think we would be high 60s.
Well, I would tend to agree with that. I mean, I think anything that's in the market today already reflects the war risk premium. And, the war risk premium is, mainly the tension in Gaza and Israel and how does that get resolved and how does that cool down the other players in the region who are trying to, kick the hornet's nest to, enhance their position within the Arab world or within their own population base. That's what this all comes down to. And, Iran is trying to, be the back scenes player, it seems, trying to keep their proxies engaged, but not being too engaged. I mean, I think the biggest question on the whole Red Sea is that once Iran put their destroyer or whatever type of boat that is into the Red Sea, what are they going to do with that? Is it just there for show, or is it actually there to protect the Houthis? So, and I can't see Iran actually getting involved in protecting a Houthi boat attacking a merchant ship.
Well, no, I
Can't see
mean,
that happen. I can see them trying to posture themselves, or they would put themselves between a U.S. destroyer or a U.S. Security squad or a coalition security squad trying to fend off the Houthi boats. I could see that happening, but creating a passive aggressive barrier, um, but not actively engaging against the coalition versus the Houthi. Because I don't think
yeah,
Iran wants to go down that road.
no, I don't even want to comment on it, to be honest. But I like I said, it comes back to a news value discussion. Is is there as much fear in a news article now than there was 2 or 3 weeks ago? What's happening in Red Sea? What's happening in Gaza? I'd argue no, because when people read the same story every day, it loses its value. It loses its value, like I said, about Russia, Ukraine. We're 22 months into that conflict and nothing has progressed in any way positively. In fact, Ukraine arguably are more in a negative place because there's some pushback on funding. Anyway, talking about disappointments in markets, non-farm payrolls out last Friday, first one of the year, came in higher than forecast. I think it was 260 instead of 180.
Well, that was the last one. That was the last one for last year.
Right, so that was deck numbers, but
That
I
was
mean,
the December numbers, but still, they came in a lot stronger than people were expecting.
yeah, but I mean, it was the first one of this year, but it was for last year. I know what you mean. Um, I mean, I mean, you and I both said we didn't see an interest rate cut until the summer, and Q3 is probably that. I think that's probably mid Q3 now, because inflation's still up, people are still getting hired. There's, I'd say the the dovish tone is certainly still there. I mean, what do you think?
Um, I'm in the camp that there's probably no interest rate cuts, you
This
know,
year?
this year at all. I think the market stays 5.25%, and I don't think it goes any higher, but I don't think it goes any lower. Because you do have to let some of these other factors squeeze out of the market. I mean, so you do have to let, the inflationary pressure from the Red Sea reroutings. You have to see how that actually prices into the market, because what you don't want to be is the Fed, oh, we cut rates, oh, now we're raising rates again. Oops, we missed this one.
Yeah.
So I think they're more keen to see how this actually goes through and affects pricing. And also I think you have to look at, how does the ETS pricing come into play? Granted, it's a small percentage of the overall freight bill, but it's still a percentage of the freight bill going up. And it's not going up in relation to a inflation rate, it's going up higher than an inflation rate would be. But that's going to roll into the cost of goods being sold and cost of goods being delivered in. But that will come back through on the PPI numbers when they start being published probably in Q2
Yeah.
for whatever happened in Q1. So again, it's kind of a wait and see approach. I can't see the Fed cutting rates because the market in the United States still seems to be percolating along without much of an issue. There's a lot of commentary about, oh, this is more expensive, that's more expensive, but food and fuel is not part of the core inflation number, so that's kind of pushed off to the side anyway. So your energy and your fuel usage, your food usage doesn't get counted. But the cost of other goods has seemed to be stable, if not dropping slightly. Therefore, what more does the Fed have to do? I mean, if they start cutting rates now, they're probably going to be getting ahead of the curve and um, not have the bullets needed when a slowdown actually happens.
Yeah, look, I think I don't agree with you entirely that there won't be rate cuts. I think there will. I think there'll probably be two, but I think that well, no, I'd say 2 to 3. I think I'd go with the majority there, but I don't think there'll be an aggressive narrative at all put against anything. But yeah, um, yeah, we'll have to wait and see.
Well, I believe in the historic averages. We're at the historic average, 5%.
Yeah,
So
probably.
why do we need to go back to 1%?
Sorry, 1 second. I need to disturb my video. 1 sec. Sorry about that. It's that's what we get at the start of the year and this time of day when the kids are back from school. Is Daddy, I need a snack. So I'm afraid I'm going to have to leave you there, people.
Well, that's all the time that we have for today as Matt Stanley runs out to get a snack.
Sorry.
Click like and subscribe where you can. Catch us on Spotify, catch us on YouTube, and catch us on LinkedIn.
Yeah.
Smoking
Cheers,
Barrel
guys.
out. See you
Yeah.
next
Happy New
week.
Year. Cheers.